Hello and welcome to Stockbusters on TaipanFinancialNews.com. I'm Andrew McCord. Today we're turning our focus towards a stock that's climbed 108% in the past year. Go back 2 years and this company's seen its revenue soar 142% and a profit increase of 84%. With numbers like this, it seems like oil services firm Dawson Geophysical, ticker symbol DWSN, is a real winner. Dawson's expertise in helping big oil companies find new petro reserves through seismic data acquisition and its ability to determine which locations to drill and explore with pinpoint accuracy has made it a top-performing oil player over the past few years. However, my guest today, Andrew Mickey, editor-in-chief of Breakaway Investor, says this stock is one to take your money out of this summer. Over the past few years, Andrew's been all over the oil industry and identified oil services firm Acergy before it climbed 68% in the past 12 months. And he was one of the first analysts to spotlight the seismic data sector of the oil industry. But his biggest claim to fame is his call for oil to hit $30 by 2009. Now he's saying Dawson is one stock to avoid. Andrew, thanks for coming on the show today.
Thanks for having me.
Let's get straight to it. We've already been over the numbers, but I have to ask, how is 84% profit growth bad? To me, that kind of growth, in addition to a stock price that's doubled, sounds like a winner. You disagree, though?
Well, to be honest, Dawson was a winner. Dawson shares have done well over the past year, but we're coming up on the end of this run. You see, Dawson has just been riding the tide of all the players in the seismic data subsector of the oil services sector. Dawson was in bad shape a few years back, and as a result, when times are good in the industry, they're great for Dawson. But when the industry isn't doing so well, Dawson will be doing terribly. It all comes down to its position in the market. Dawson is a smaller player that's on the periphery of the sector. They have no discernible specialties, or to put it another way, they have no moat to protect them from competition.
Okay, so without a moat, they're susceptible to competitive forces. However, from what I see in the seismic data subsector, there is plenty of demand to go around, even for the smallest players. And that demand just keeps growing right along with oil prices. So what am I missing here?
Well, this is a situation where the competitive landscape is absolutely key. I'm afraid small guys like Dawson just won't be able to keep up, as larger players like CGG Veritas and Petroleum Geoservices, as they rapidly increase their ability to meet big oil's demand for seismic data services. But what concerns me most is Western Gecko. Western Gecko is the seismic data segment of Schlumberger, and what Schlumberger is doing with Western Gecko right now is cutting prices in order to get its foot in the door. You see, Schlumberger can trounce any one of these seismic data service providers on price because it can offer a massive discount. Heck, Schlumberger can even take a loss on the seismic data services they provide. That's all because they'll just make all the money back on their more expensive, higher margin oilfield services. That's the advantage of being such a large, diversified company. And we can already see the impact of moves like this on Dawson. Although profits are up 84%, revenues have increased 142%, like you said. This is a giant red flag you have to pay attention to. When revenues are rising faster than profits, that means the company is seeing pricing pressures. As a result, it has to cut its prices just to compete. In the end, this squeezes operating margins, creates less profit per dollar of revenue, smaller market share, and a lot of other factors that signal a bad investment.
Okay, I see. All of these factors can't be good for a lot of these seismic data service pure plays. But as we see with soaring revenues, there's still plenty of demand out there for seismic data services. So how do we play it?
Although I like Schlumberger's model, the company is a $100 billion giant in the oil industry. And the chances of it going to $200 billion in less than a year aren't too good. It's just too big, and the potential upside is very limited as a result. That's why we need to get a little more creative with this situation. To be honest, I pride myself on the level and amount of research the Breakaway Investor team does when we're looking at an industry. But in this case, it's best to be lazy.
Wait. You want investors to be lazy? So you're talking no research, no due diligence?
Well, I wouldn't go that far, but yes, be lazy. You see, these seismic data service providers are going to kill each other by competing for each major project that comes along. In the end, they'll all be hurt by aggressive competition. Sure, you could spend days looking at the industry and figure out which one will do best, or you can just buy the company they all turn to for equipment. And that's what has really got me excited about the growth in this industry. They all turn to one company for their equipment. Sure, they make a bit of it in-house, but there's one company that specializes in making seismic data equipment for these seismic data companies. and seismic data service companies are buying it up at a stunning rate. In this case, it's best to play the picks and shovels of this fast-growing sector. That way you get to enjoy the growth of the entire sector, but there's a much greater element of safety involved. In fact, the small picks and shovels company I've been covering just booked a massive $160 million order to provide its advanced cutting-edge seismic data equipment to the declining oil fields in the North Sea. After 2 years of double-digit declines in production, North Sea oil companies are trying to make a comeback. This company is doing so well, in fact, Jefferies & Company and Lehman Brothers recently put out buy and overweight recommendations on this stock. This one's going to be a big winner and is my #1 way to play the growth in this sector.
Andrew, I'm sorry, but we're almost out of time. That's definitely a company that's worth considering. Where can viewers learn more about it and this fast-growing industry and your #1 way to play it?
Well, you can learn all about it at breakawayinvestor.com.
All right, Andrew Mickey, thanks for coming on with us today.
Thanks for having me.
You can access breakawayinvestor.com right here on the main page of the TFN site, as well as new articles and analysis from Andrew Mickey every week. Thanks for tuning in to TFN Stockbusters. I'm Andrew McCord. Until next week, keep your portfolio safe.